Thanks for joining us on lunch. This is Bloomberg Quint. I'm Harsha Subramaniam.
Good afternoon. I'm Ira Dugal. Let's get you the headlines. Indian equities continue to slip lower. Sensex drops more than 300 points. Nifty trades below 11,000.
The government allows 100% FDI in merchant coal mining and relaxes sourcing norms for foreign players in single brand retail. Brings up a 26% cap on FDI investments in digital media.
Cabinet also announces a 6,200 crore export subsidy for sugarcane. Farmer says the amount will be transferred directly.
Nestle will replace Indiabulls Housing Finance on the Nifty 50 from the 27th of September.
And the UK Prime Minister Boris Johnson's plan to suspend the Parliament has been challenged in an Edinburgh court by Brexit opponents.
We'll get to that in a moment. Quick check it out. The markets are firing today. Yatin is here with a closer look.
Good afternoon, Harsha, and we are below that 11,000 mark on the Nifty, so significant amount of selling flows is what we are looking at for the markets at this point in time. Of course, the Nifty Bank is clearly underperforming. Yesterday also we saw 1% cut coming in. Today also 1.5% down for the Nifty Bank. So clearly banks are under pressure for the trade today. In terms of the advance decline ratio, also things are not looking that great. We have almost 33 declines on the Nifty 50 versus 17 gainers. What's moving in trade is the likes of Sun Pharma, Vedanta, Eicher Motors as well as Coal India. So the metal and mining pack continues to remain active in trade. Sun Pharma, of course, post the reports that market watchdog SEBI had given a clean sheet with regards to a whistleblower fraudulent report. After that allegations, we saw some share stocks which were under pressure, including Sun Pharma Advance as well as Sun Pharma. But after a clean sheet, which the report suggests, the stock is quite active. On the losing side, Yes Bank is down 7%, so the pressure really continues there. A big amount of short positions being created in the future and option segment. The rollovers are not that great as far as the expiry trade is concerned in the future and option segment. Indiabulls Housing Finance, after the Nifty exclusion, that stock is down 6%. According to a Motilal Oswal sales note, there could be selling of almost 250 crore rupees once the exclusion takes place, and the selling follows from the index funds. Tata Motors is down 3%. ICICI Bank and SBI are also the others which are under pressure. 2.5% cut coming in for all of them.
Yatin, thanks so much for that. We are awaiting the Reserve Bank of India's annual report, which should come out at some point today. One of the points of interest from the annual report will be how the Reserve Bank of India managed to transfer a record surplus of 1.23 lakh crore to the government. Vishnath Nair has a heads up on what could be behind that number. Vishnath.
Right, so as you said, it was a record surplus of about 1.23 lakh crore. So this year, in financial year 2018-19, the Reserve Bank of India saw some increased income coming in from certain sources. The first of which is the large amount of OMOs that it did. It made about an additional net income of 36,000 crores. So that sort of added to overall what the income from the OMOs would have been. Plus, it also changed the way it evaluates its foreign exchange reserves. So it started using something known as a weighted average cost model, and on the basis of that, there were about 21,000 crore worth of gains that came in from the Forex reserves. Now, this model was suggested by a previous committee that was headed by Vayesh Maligram back in 2013. At that time, the Reserve Bank of India was not in favor of this, but now that the Jalan committee has also recommended it, they went ahead and implemented it. And on the basis of that, they said that there's about, what we understand from people who are aware of the matter is about 21,000 crore worth of additional Forex gains have come in. So both these things sort of propped up that 1.23 lakh crore number. And also the Reserve Bank of India has not made any large provisions during this financial year, during FY19, because of which the entire income, that additional income that it earned, so that income gets transferred to the government. Typically, it removes certain provisions and then transfers the rest. So this time, since there was no provision, so the entire amount went away. What the Reserve Bank of India has also done is, the central board has approved this maintaining realized equity about 5.5 to 6.5% band. So the central bank chose to keep it at the lower end of that band at 5.5%. What we understand from these sources is that they followed the European Central Bank model, where essentially they take 10 of the largest banks in the country, irrespective of who the owner of those banks are, and then look at what if all these 10 banks fail, and if the RBI has to extend liquidity to them, and when the banks repay them, then at a 20% loss ratio, the RBI measured what would be the necessary surplus that it would need to maintain, the reserves that it would need to maintain, and that worked out to be about 5.5%. And so the RBI has chosen to keep it at that level. It is highly unlikely scenario in India because we have a large number of public sector banks. The government is always there to support these banks. So highly unlikely that all 10 banks will fail. So therefore, the Reserve Bank thinks that it has enough reserves for any dire situation that might arise in the economy later on.
Okay, just a quick word on how this accounting change is going to work. Essentially, from what I understand, the cost of the intervention in the Forex markets will now be measured against the weighted average cost of the reserves. Earlier, it was measured against that week's
whatever
sort
the
of average.
Price, yes.
So, so even in future years, this leaves the room open for a larger income accruing from Forex interventions.
Right. So what we understand from these sources is that the RBI is not really planning for larger gains to be made over the year. They will leave that to the market, and as and when things play out in the market, they would account for those reserves. But one important point is that these are all realized gains, and that is important. The RBI said that it will not transfer any unrealized mark-to-market gains. So as long as it realizes that amount and as long as there is a gain, that will be transferred to the government.
Interesting. Thanks, Vishwanath. The cabinet announced a fresh round of measures to support the sugar industry. The centre has approved over 6,000 crore in export subsidy. Yash Upadhyay is standing by with the details. This clearly helps the surplus, doesn't it?
That's right, Harsha. So what they've announced is that they will be giving out a subsidy of almost 6,286 crore rupees and have mandated a minimum export for this for the upcoming sugar season of almost 6 million tons, which increases from 5 million tons last time around. Also, they have bumped up the buffer stock from 3 million tons for last season to again 4 million ton for the upcoming season. Now, how they plan to do it? It would be mostly following the model that they've used for the fertilizer space as well. So it would be a direct benefit kind of a model wherein they would directly transfer the subsidy into the bank account of the farmers. Now, as far as the objective of this is concerned, we are looking at a big sugar product this time around as well, and because of that, the prices as well as the overall situation in terms of cane arrears too has worsened. So this would address both the situation, as it would remove the excess sugar in the system as well as arrest the fall in prices. We have seen in fact the government take steps in order to protect the downside of sugar millers as well, because they increased the minimum selling price of sugar from 29 rupees to 31 rupees earlier. They have also kept the FRP on sugarcane continued at 275 and not increased the prices. And this additional measure will only bring additional cash flows to the tune of 18,000 crore rupees for the sugar millers, which would help in battling the kind of the cane arrears that are there in the system, which account to almost around 10,000 crore rupees. The production, though, is still likely to be a big number of almost 33 million tons versus the expectation versus the consumption of 26 million tons. And as far as the export trend is concerned, we did manage to sell close to 3.2 million tons of sugars in the export market, and this time around too, it seems that at least if not for 6 million tons, then we would be able to maintain this figure, is what one of the large sugar companies has also told us. So all in all, it's a good announcement and something that the industry had been working with for some time, and finally it has come out.
Thank you so much for that, Yash. The government has also announced a slew of changes to the foreign direct investment policy, from 100% FDI in coal mining to easier norms in single brand retail. Nikki Mirchandani and Agam Vakil join us. Nikki, what does the 100% FDI in coal mining mean for the industry?
Sure. It's a 100% FDI for merchant miners this time around. Earlier, FDI was allowed for captive coal mining. It's not as easy as it looks like, because the private Indian miners, there has been no mine allocated so far. In Feb 2018 also they opened up the mining for private sector as a whole. But then not brokerages don't make much out of this development either. If you look at Bank of America Merrill Lynch, it suggested that new mine development will face challenge. MK says that it's a welcome move, but it doesn't see any kind of near-term risk for Coal India. And ICRA, on the other hand, also says to an extent it would create a competitive pressure, but this is only for medium and long term. What's a really cause of worry for this measure which has been announced is the overarching presence of Coal India. Now remember the fact that 80% of Coal India country's output is contributed by Coal India, given the monopoly it has. Also, there has been a shortage of rigs. One of the issues why Coal India has been missing its target for the last 13 consecutive years as a whole, time taken for land acquisition and and also not forgetting the kind of time taken for environmental and forest clearance net because of which Coal India has also not been able to perform. If you look at the momentum of the stock, also nothing much on the counter. The stock is not really reacting on this development.
Thanks, Nikki. Agam is also with us. Agam, on the single brand retail, yesterday's cabinet decision makes it easier for the likes of Apple to meet the minimum local sourcing requirement?
Yes, well, two decisions coming through. First one, of course, the 30% local sourcing rule, which has been eased on a lot of accounts. Firstly, of course, that exports will be factored into this 30% sourcing norms, which means that they can come in place in lieu of imports. And the other one is that the procurements made from India will be considered as local for that particular single brand, as well as the fact that adjustments can now be made on a 5-year basis, and that local sourcing will not be considered annually, but something that can happen, that certain adjustments for a certain year can be made before and after that particular year. And one more important announcement, of course, was also the fact that single brand companies can start online sales before they see their brick and mortar stores come online. So that is, of course, also a positive.
Agam, thanks for that. And Apple is already working on setting up an online platform to sell its products in India. The tech giant has so far used redistributors to sell in India. Nishant Sharma joins us on the phone line for more on this story. Nishant.
Well, right, Ida. Apple will get a big boost after the government eased the local sourcing norms for the single brand retailers for the foreign players in the country. And Apple has been really eyeing for, and lobbying for easing as it goes as long as back at 2015. They've been eyeing, to set up an easing of the local sourcing norms so that they can set up their offline footprint in the country. That's how they do it basically in the US and the European market. And now with the government, while that has been done, and also government has said that you can also set up an online store in the country only under the condition that in the 2 years' time, you will be launching an offline store. According to one person privy to Apple's plans, Apple is really looking to set up, to begin with first, quickly roll out its first online store in the country, just to begin the sales in the country, and followed with that, it has already started the work for the offline, so which most likely come in the Mumbai market, but the talks are happening. So, but it's a big boost for Apple, and we will see Apple at least to begin with roll out its online store in the country for the sale of iPhone and other products.
Nishant, thank you for that. The other sector in focus is media. Digital news media has been brought under the FDI regulations for the first time. Foreign entities can invest up to 26% in digital media platforms that upload or stream news and current affairs, but only with government approval. These new rules are in line with those of print media.
All right, let's move on. There are fewer vehicles gathering dust at dealerships or company warehouses right now. That's not because sales have picked up, but automakers have consciously cut production. The Bloomberg Quint Auto Dealers survey shows that sales in August have been even lower than the preceding months. Yash Upadhyay is standing by to take us through the findings. Yash.
That's right, Ira, because what I've gathered from speaking to 10 or more analysts is the fact that August has been one of the worst months for the auto dealers in at least over the last 2 to 3 month perspective, and that's the reason why we could see a big double-digit drop in sales on a year-on-year basis for almost all of the auto OEMs, be it the four-wheelers or two-wheelers. Now, in terms of the four-wheelers, well, Maruti Suzuki could report at least a 27% drop in sales, followed by about 15% for Mahindra, and as big as 36% drop for Tata Motors. In the two-wheeler space, there is a similar scene there as well, because the likes of Hero MotoCorp, Bajaj Auto, TVS, as well as Royal Enfield, all likely to report drop in sales of anywhere between 15 to 20% on a year-on-year basis. Now, the main reason for this is the fact that the month of August for the last 2 years has been very positive for the industry. So there is this high base effect that has also played out. There were several new launches in the month of September. Tata Motors had come out with the Tata Nexon. There were new launches from Hero as well as Maruti and M&M, all of which resulted in a bump up in the wholesale number, is why we saw the big number in the same month last year. That apart, the delayed monsoon, that has had a negative effect as well. Although the festivities have not yet quite started, the inquiries have picked up, but the conversion into actual sales, that has not happened yet, and we are still seeing that although the walk-ins have increased, the actual sales have not seen a substantial enough pickup. As a result of which, which most of the auto dealers, they have had to resort to deep discounting. And again, it is that season where auto dealers are offering huge discounts, which go up to all the way up to 45,000 rupees when it comes to Maruti Suzuki, 70,000 for Mahindra cars for select models, obviously, and up to 55,000 for Hero MotoCorp. There are select offers on Hero as well as Bajaj and TVS bikes as well, up to 6,000 rupees of discounts there. No official discounts when it comes to Royal Enfield. And lastly, as far as the overall industry scenario is concerned, most of the dealers, they expect the month of September to be a slow month, as this is also a period where, you know, most of the sales don't happen, and only October would be seen as a period from when the revival is likely to be expected. One of the positives that the industry overall is watching out for is the scrappage policy to be announced, which should, you know, revive the volumes once again.
Yes, thank you for that. Indiabulls Housing Finance is going to be replaced by Nestle on the Nifty 50 from the 27th of September. The NSE exchange also made some changes to other indices as well in their semi-annual review. Darshan is here with some of those changes.
Yeah, so this happens basically twice a year. So this time around, the expectation was probably Z would go out, but that didn't happen. This time around, it's Indiabulls Housing Finance which has gone out, and the introduction is Nestle India. Nestle comes back into the index after almost 16 years. It was there in 1996 where it was included, went out of the index in 2003, and Indiabulls Housing Finance, after 2 years pending in the index, has gone out, and it's actually given a lot of negative returns for the time it's spent in the index. So these are the big changes that are there. In terms of flows, what we are anticipating, Edelweiss sees an inflow of $112 million. Motilal Oswal sees inflows of almost $95 million. In Nestle, an outflow anywhere between $35 to $40 million is something that we're looking at, because a lot of these funds they benchmark their portfolios according to the index. So till the 26th or 27th, we will see these flows come in, and that's also being reflected with Nestle being up today and Indiabulls Housing Finance being down. Some of the other things that we need to watch out for, the weightage of the FMCG or the consumer names goes up. So this is the sixth company, so 13% index weight that will come in. So it will be close to a 1% weightage for Nestle compared to a 0.3% weightage that will go out. So some of the other companies' weightages will also come down. ITC has the largest chunk in the FMCG index. Now it won't move the needle too much for the Nifty in terms of weightages, because you have a financial service that goes out which has a 40% weight, and you have a consumer which actually comes in with an 11% weight, so that will go up. But remember, the PE of the index will go up significantly, because you have a very high valued stock that comes in and you have a very cheap stock that goes out. So Nifty is becoming much more and more expensive. So that's the view that we're seeing on the Nifty. Some bit of changes on the Nifty next 50. This is basically the next 50 stocks apart from the Nifty which are most important. So Berger Paints, after a strong performance, comes in. Punjab National Bank at one point of time was a Nifty stock. That's come in. Indiabulls shifts from the Nifty to here, and PFC comes in. What is excluded is ABB because of the corporate announcement and the demerger that is there. BHEL, once a Nifty stock goes out. MRF and SAIL, because of the weak performance, have been excluded from the Nifty next 50.
Darshan, thanks for that. CG Power and Industrial Solution has removed Gautam Thapar as the company's chairman with immediate effect. The board cited governance and financial lapses that have come to light following an investigation for his removal. The stock has been stuck at the upper circuit since the company put out this statement. Gautam Thapar, who runs the Avanta Group, has less than 10,000 shares in the company now after lenders invoked the pledges he had created to borrow money.
From the UK, Edinburgh Court will take up a number of pleas challenging Boris Johnson's decision to suspend the UK Parliament. A group of 70 lawmakers have sought an urgent hearing hours after British Prime Minister announced plans to suspend the Parliament almost 5 weeks ahead of Brexit. Charlotte Ryan of Bloomberg News now joins us with the latest. Charlotte, fill us in.
Yeah, so this was a decision that was taken yesterday and came as quite a shock, both to lawmakers and to UK investors. The latest, as you've said, is we've got this decision in Scotland on whether to seek an injunction which would prevent Boris Johnson from moving forward with these plans. We don't have a verdict on that yet. If that doesn't pass through, the next opportunity for lawmakers to challenge this will be when Parliament returns briefly next week. So they'll be coming back next Tuesday, and then they'll have the option of either pursuing a vote of no confidence, which would seek to disband the government, or they can try and oppose this through other means, such as passing legislation to seek another Brexit extension.
Charlotte, many thanks indeed for joining us with those details.
Thank you so much for watching. Stay tuned.